Hi there, welcome to Kneppy Invest. In this video, I'm going to talk about one of my rules I've developed over the years as an investor. And this is one of my most important rules, and it's very closely aligned to one of my other, not really rules, but mantras. That's being patient as an investor. And the whole reason I developed this rule over the past decade or over a decade is because when I first started investing, I'd get overly excited when a company I liked or followed released some news before the market opened on the day. And I would put in a bid before open, and then sometimes, not always, but sometimes that bid would be successful and then the share price would fall. So even though I thought it was good news, I liked it, the market had completely different thoughts than I did. So I decided that instead of taking action upon release of good news, I just want to wait to see how the market reacts, not only in the first hour, but over the next few days. So one of my rules is don't overreact to announcements. Now to the agenda for today's video, I'm going to be looking at three setups. The first two setups have happened in the past week. And when I'm talking about the first setup, which was or is a typical overreaction from the market to an announcement, and this was a full-year results release from EML Payments, and that's the whole inspiration behind this video, hence that nice little image on the top right here. Now, EML Payments released their full-year results on Tuesday afternoon, just after the market had closed for the day. And I was actually interested to see how the market reacted to the release of the results on Wednesday morning. And I was really shocked by the initial reaction because the share price fell by over 10% in the first 10 minutes when trading started. And I was thinking at that point in time that this was an overreaction and I could take advantage of that overreaction or that perceived overreaction. But the market was thinking the same thing. And in the next 40 minutes, the swing in the share price was phenomenal. In fact, instead of being down 10%, at one point the share price went up 6%. So that was almost a 20% swing in share price of EML Payments in the first hour of trading. And there would have been a lot of investors who got caught up in that first 10 to 15 minutes, saw the share price down 8 or 10%, and would have taken action because of that. There could have been even stop losses hit because of that initial decrease in the share price. And I have found over time, all you need to be is a little bit patient just to see how the market not only reacts over that first hour, but for the rest of the trading day. Because there is some truth to that adage that amateurs open the market and professionals close it. I have found over time that if the results of a company or news from a company are really good or bad, and we see the market down in the first 10 minutes, 30 minutes or hour, and if it continues going down or up, that's the professionals digesting the news and realizing the news is bad or good. That's why sometimes you'll see the share price continually fall or rise on news flow from a company. But if the share price swings by 20% in the first hour, that means the initial reaction from the market, which is the amateurs opening the market, is wrong. And then the professionals come in and they realize that initial reaction is wrong and they buy near the low. You always see this in the first hour of trading after a company has released some news. So I'm going to show you this example of EML Payments. That's the first setup. The second setup is when you can take advantage of a market overreacting to news flow. And I did that a week ago with another company called Alexium. And then in the third example, this is going back quite a few years, 3 or 4 years. I'm going to show you when a reaction from the market is not an overreaction. And this is the type of news flow from a company that is really, really powerful. And if you've been following my video channel, you know what sort of announcement I'm talking about. These are the most powerful sort of announcements. And in this example, we're going to see the share price rise, I think it's like something like 20% in one day of positive news. But then I'll show you what happened to the share price over the next year after this announcement. And this is why sometimes you have to take heed of what sort of announcement the market is reacting to, and just look at how the market reacts to that announcement during that day and then over the next few days after the release of that announcement. On to the first example, and that's the email payments. I've already talked about they released their full-year results on Tuesday afternoon after the market had closed. So everyone could digest the results overnight or before trading had begun on the Wednesday. And the share price did fall by a lot. And you might notice, particularly if you look at Motley Fool, their website, they release news flow continuously during the trading day. And they jump on board what happens with the share price movements of companies almost immediately. So this was an article from Mitchell Lawler on the Motley Fool, who released this bit of this article at 10:14 a.m. So this is 14 minutes after trading had begun on the ASX. I'm not sure if email payments, they begin their trading a little bit after 10 a.m., maybe 10:02 or 10:03. And at this point in time, when he wrote this article, the share price was down over 8% from when it closed on Tuesday, and it was about $3.25. And then in the next slide, after this, I'm going to show you the 1 minute chart for email payments. And you can see, even though this article was released at 10:14 a.m., it was completely wrong because the share price, even 14 minutes after trading had begun, had already started to climb quite rapidly. Now to the 1 minute chart from email payments will show you how the market completely overreacted to email payments full-year results within about 5 or 10 minutes after trading began on Wednesday, the 18th of August. This goes back to the end of trading on the Tuesday, the 17th of August, when the share price of email payments was hovering around $3.55. And then email payments released their full-year results about 4:30, 4:45 after trading had finished for the day. Some people would suggest, and I actually have heard this, that news or companies would prefer to release their bad news after trading for the day has finished. I'm not sure the reasoning behind that, because then the market has even more time to digest that news. And I think the overreaction from the market in this case, and I'm not 100% sure about this, but it has to do with the opening auction. For those who don't know, you can put in bids to sell or buy a company's shares before trading begins. And what the system does, it weighs up all the sells and all the buy bids and sort of tries to even it out. And you do get an indicative price of where a company's share price might open up to balance out all the buy and sell bids. And I'm thinking more than likely what happened with email payments on the 18th of August before trading had begun. There were a lot of people who put in some sell bids because they thought it was bad results. And that meant the indicative price of email payments was showing the share price would open about 8-9% down. And a lot of amateur investors would overreact to that indicative price. So they would also put in sell bids as well. And when email payments opened up on Wednesday, it was down about 10%. In fact, the low in email payments share price happened at 10:04 a.m., which would have been a few minutes after trading began. And that's at $3.16. And then that Motley Fool writer saw the share price was down a bit. He decided to write a very quick article, and the time he wrote it, the share price was $3.25. When Motley Fool released that article at 10:14 a.m., the share price was already recovering and was approaching the closing share price on the Tuesday. It was already at $3.43. So it had risen 18 cents by the time he wrote that article to the time they released it. And the share price kept on rising. It went way past the closing price on the previous day and kept on rising. In fact, their share price at one point got to $3.75 within an hour of opening. So the share price had swung 20% in 1 hour. And what that's telling me is that old adage that amateurs open the market and professionals close it is particularly true in this. Professionals saw this overreaction from the market because they knew and they believed that the full-year results from email payments were quite good. And they thought they might take advantage of this overreaction from the market. And we know it is a reaction in hindsight, but just the way trading has continued to raise the share price higher over the next 48 hours of trading, even though the overall market was down in these 2 trading days, the share price kept on rising from EML payments. In fact, the share price closed at a high on the Thursday at about $3.84. And this tells me that even though I have not even looked at EML's 4-year results yet, I sometimes will wait a few weeks before I have a look at companies I own, because I already know the results are looked at in a positive light by the market just because of the reaction over a 2-day period here. Not that first hour does not indicate at all how the results are being viewed by the overall market. It's the whole trading over a numerous amount of days. That's how you tell how results are viewed by a market. Now to an example when you can take advantage of an overreaction from the market. Now I'm using an example of Alexium because this has happened with this company a few times over the past 8 or 9 months. And last week, around about the 11th or 12th of August, I forget exactly which day, the share price was about 7.2 cents. Then they released a non-price sensitive announcement to the market. And for some reason, the market initially loved this announcement. Share price rose from about 7.2 cents to 10 cents in less than 30 minutes. And I do have an alert which tells me when the share price of Alexium gets to above 9 cents. And when it got above 9 cents, I automatically put in a sell bid and it was hit at 9.4 cents. And I'll show you why in the next slide why I did that. So that share price increased by 2.8 cents, which is almost a 50% rise in share price on a non-price sensitive announcement. Now, there could have been some other reasons behind that increase in share price because this company is a favored company in next investors and they will put emails out to their customers. And whenever they put an email out, you can see a rapid increase in the share price of Alexium and other companies they follow as well. And then Alexium's share price went into a trading hold just after 11 a.m. after they released this announcement. And they remained in a trading hold for about 24 hours until the Friday, the 13th of August. And the reason they went into that trading hold wasn't because of that increase in share price, because they released that announcement on the day. It was because they needed more clarity in regards to that announcement. And as soon as they came out of that trading hold and gave that clarity, the share price plunged. In fact, it's plunged all the way back to 7.4 cents, which is the same share price it was trading before the release of that announcement. So right now, I'm actually thinking of buying back in at 7.4 cents. So I've sold at 9.4 cents, and I'm thinking of buying back in at 7.4. And that's how you can take advantage of overreactions from the market. It won't always work because sometimes when you think the market is overreacting, potentially it's not, and the share price keeps on rising. But in this case, I took advantage of a situation where I thought the market was overreacting. And the other reason here is Alexium does have a history of the market overreacting on occasion. I'll show you that in the next slide. As we focus on Alexium's daily chart for the past year, there's one thing that really stands out to me when I look at this, and this is whenever the share price rapidly increased to around 8 to 9 cents, even towards 10 cents, there's a high chance we might see a rapid sell-off in the share price. And one of the reasons we do see these rapid increases in share price and then a rapid drop is because of the reason behind it. And the reason behind these rapid increases in share price isn't because of good financial news. The reason behind it is because Next Investor releases some favorable emails in regards to this company, and their clients see this email recommending this company and they'll buy en masse. And that's not a good reason for a share price of a company to rise because it's not financial based. It's just around a story. So whenever you see share price rising rapidly like this is possibly a good reason to send out your shares, and then if you do like the company, buy in at a lower price in the future. It may not always work, But during the past year, it's definitely worked for Alexium. If we go back to about September last year, share price rose 38% on no news, just a next investor hyping up this company. The share price got to a high of 9.3 cents. And then we just saw the share price drift down over the next month as all those people who bought in because of that email started to sell out because the share price wasn't rising. Share price fell all the way to 5.4 cents in November last year. And then we saw another rapid rise in the share price. In fact, the share price rose from 5.4 cents to a top of 10 cents towards the end of November of 2020. In fact, on consecutive days, the share price rose 19% and 23% before we saw the share price fall off a cliff. In fact, the share price fell from 10 cents all the way down to 5 cents in less than 1 month. That's a 50% drop in share price on no news. Again, the whole reason the share price increased like that was because of favorable email from Next Investor. Then we saw a bit of not much happen with the Alexium share price over the next 4 or 5 months. We did see the share price rise 20% on one day towards the end of January, got to a high of 7%, but that was a failed pump and dump. And then share price fell all the way to 4.4 cents in May of this year. And then we saw the next round of emails from Next Investor. And that's that this pump has risen the share price of Alexium from 5 cents again to a high of 10 cents. And when I saw that share price get to 9.4 cents, I thought it was a good opportunity to sell out. Just wait to see the share price fall as it has done in the past. Now, we have seen a bit of consolidation around about 7.4 cents. So now could be a good time to buy back in. There is a possibility we'll see the share price drop even further to the 6s, possibly even to the 5s. But this latest pump has been a little bit more successful because we've seen 2 rapid increases in the share price. We'll say 3 rapid increases in the share price with this company. And we've seen a prolonged period of increased volume as well. So this has been a more prolonged pump by Next Investor, it seems like, because there hasn't been much positive news from this company over the past month. Now to a situation when the market reaction to an announcement from a company was not an overreaction. And it's very important to distinguish, or being able to distinguish, between when the market is overreacting and when the market is not. And this is definitely an example of when the market is not overreacting to an announcement from the company, even though the share price has risen 26% in one trading day. I won't talk about what this company is just yet. I'll wait 2 slides because I just want to show you the performance of this company's share price in 1 year after they released this particular announcement on May the 17th, 2017. So let's just have a look at what the share price was doing before this date. In fact, the share price got to a high of about $3.60 in August 2016, and the share price was drifting low. In fact, it fell from that $3.60 to $2.60 the day before they released this announcement. And then when they released this announcement, the share price rose 26%. Now, I'm going to talk about what this announcement is just yet, but this is the sort of announcement I'm always looking out for. And whenever I see this sort of announcement, there is much more likely that the market will not overreact to this announcement. In fact, there will be some investors out there, particularly amateur investors, who see the share price rise 26% on the back of this announcement and will never buy into this company simply because the share price has increased 26% in 1 day because of recency bias. They think the share price was significantly lower a few days before this, so why would you buy into? But then I'll just show you in the next chart what happened to the share price of this company in the next year. And this is why you do react to this sort of news flow from a company. So on this particular day, the share price rose 26%. The share price had been higher in the previous 8 or 9 months. But you can just see what happened to the share price in the subsequent 4 trading days. The share price kept on rising. And that's telling you straight away how powerful this announcement is because there's no selling coming into the market. The market loves this announcement. And when you look at this announcement, I'll show you in 2 slides, there is a reason behind the power and the performance of the share price because of this one particular announcement. This is the 1-year chart of this company from when they released this announcement. The share price rose 26% in the 1 day. There are a few things to take away from this chart over a 1-year period. The first thing is, even though the share price rose 26%, and there's going to be a lot of people who won't buy in to that company simply because recency bias. They see the share price has risen 26%. Why would you buy into a company when you could have bought it cheaper a few days before? And this is the reason why. On that day, the share price rose to around about $3.26 or $3.25. But you can see over the next year, the share price rose from that $3.25 to a top of almost $14. That's a significant increase in share price over a 1-year period. Now, that wasn't the only positive news flow from the company. They continued positive news flows over the next year, and that kept the momentum moving forward for this company. The other thing to take away from this chart is the volume. We continually see the volume increasing. So more participants in the market are getting excited about this company. And that's also driving up the share price. More funds are becoming interested. And that's driving up the share price. That's why the share price rose by over 400% in 1 year's time. So now let's go have a look at that particular announcement that was a catalyst for the complete re-rating of this share price of this particular company. And here is the announcement, and the company is Appen. And I did react off this announcement. I did buy into Appen at this point in time. So this is my favorite sort of announcement. This is the most powerful sort of announcement. This is the sort of announcement where most of the time the market won't overreact. In fact, I would actually say the market actually underreacts to these sort of news flow from a company. It's all about earnings upgrades or profit upgrades. Whenever you see a company release a profit upgrade, that's a good catalyst for a significant increase or re-rating of a company's share price. And I will sometimes buy into a company on the day they release an earnings upgrade. I've done that quite often in the past. So usually I will wait a few days, but sometimes when a company releases this sort of announcement, I will buy in on the day because more than likely the market will not overreact to the announcement. That's all I have for this video on one of my rules, not overreacting to announcements unless it's a particular sort of announcement, which I touch upon with Appen from an announcement they released on May 17th, 2017. If you do find similar sort of announcement, profit upgrades from a company, that's a good sign that there will be or could be a re-rating in the company's share price. If you do have any questions about this topic or any other topics or companies on the ASX, I'd love to hear your opinion or your thoughts. So leave it a comment or a question in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.